So is AMC and GME a stock that you should still buy? What's going on, team? It's Ricky with Techbuds Solutions, and believe it or not, this is a question that I'm still getting flooded with, and I want to do a very quick analysis. In the comment section, you can let me know what it is that you think. If you plan to buy, if you plan to hold, all power to you. I just want to understand the reason why. And on top of that, I want to talk about other stocks that are pretty good deals right now. And if you like these kind of videos, just make sure you drop a thumbs up, as it really helps out the YouTube channel. So let's go ahead and get started. One of the quick analysis that I want to talk about is AMC has pulled back and is testing support level at the SMA line. You can see that for the past 2 days, as of yesterday and as of today, we are consolidating and showing signs of a potential support. This is critical because a lot of people are performing this technical analysis, and if we see that it begins to break below the overall SMA line and it begins to make lower lows, then not only is it losing its momentum, but overall on the technical aspect, it is also losing its edge. So this is something that I'm personally paying a lot of attention to. If I see this break below the SMA line, I will pull all of my shares out of AMC and I will pull all of my shares out of GME and will not continue to trade AMC or GME until it breaks back above. I think that we can all agree that AMC and GME just have a different character to them because of the movement behind it, right? There's a lot of people in the comment section that are like, wait for the second rally. And that's something that, again, I think a lot of people are hoping for. If it happens in the next couple of days, as long as it continues to hold above the SMA line, then great. I will most likely partake in it in some form of way with a very small position size. If it breaks below the SMA line and then happens later down the road, I just don't think it will be relevant enough, and it's going to lose enough of its momentum where people lost enough money that they're just not going to want to mess with it. And I think that's a lot of the feedback that I'm getting right now, where people have cut losses, they lost more than they anticipated, and they just don't even want to touch the thing, and they just view it as a lesson learned. So it's something to take into consideration. So again, the 20-day 1 hour chart is a chart that I'm personally paying attention to. If we see it break below the SMA line, I'm just not going to mess with it anymore. A lot of you guys like when I talk about these, and one of those stocks are QCOM. QCOM actually reported earnings today, just like you guys saw on BABA. BABA was a stock that reported earnings yesterday. And because it reported earnings yesterday, and I'll go on the 5-day, 5-minute chart, it reported earnings yesterday. It acted as a negative catalyst. It aggressively sold off. I bought a couple shares of BABA, and it rose back up again. It doesn't always play out like this. Sometimes it can continue to sell off. Sometimes it takes days for it to recover. But because of me being able to buy the dip and ride the recovery, I was able to make a decent chunk of change. I made a little bit over $4,000, and I left some remaining shares just in case it continues to increase in value. I plan to take a very similar approach when it comes down to QCOM. I bought a couple shares during the aftermarket trading session. I bought 50 shares, and I plan to buy more. I'm already up $122 on the day, but again, this thing can easily still continue to sell back off. The reason I'm talking about it is on the 180-day 4-hour time frame. It's been very consistent, very bullish. It's been making higher highs and higher lows. It tends to meet a lot of people's criteria, not only on the fundamental aspect, but also on the technical aspect. And based off of this current earnings, it pulled the stock back. It provided us with a decent deal based off of previous patterns. And for those that see value in it, guess what? Maybe you can just add it to your watch list and follow up with it when it begins to make sense. Another one that I want to talk about is AA. Had an amazing performance today. It closed at 4%. I actually made a little bit over $1,000. I have 500 shares remaining, and it still has a lot more margin for it to cover. So although it's still in the very early stages of a reversal, I'm still waiting for a pullback confirmation and making sure that it stays above the EMA line. But based off of where we're at as of right now to previous highs, it offers a little bit over 30% ROI if it makes a full recovery. Very similar setup when it comes down to BK. BK reported negative earnings, sold off, began to indicate signs of reversal. This thing still has a lot to prove, but based off of where we're at right now, based off of previous highs, it offers a little bit over 12% potential based off of those 180-day highs. BOH isn't anything crazy. It also reported earnings. It also pulled on back. It's consolidating around this $80 price point, and previous highs are right around $85. So again, this isn't something that has huge margins, but it's been very consistent based off previous patterns. This is Citigroup, also negative earnings. It sold off based off of 180-day highs, which was just a couple of weeks ago. From where it's at as of right now to previous highs, that's a little bit over 13%, which is why it was added to to my watch list. And this is Copart. Copart has been selling off based off of the 180-day chart and recent resistance levels. It offers a little bit over 14%. It just recently broke above the EMA line, but we still need to make sure that we set those alerts and follow up with it when it makes sense if it begins to indicate signs of higher highs and higher lows. The next one is FAST. Sold off, overall highs right around $52. It just broke above the EMA line, which is good. It's a step in the right direction, but it still has about 10% margin. We'll see if it begins to indicate signs of higher highs and higher lows. Lemonade was a really good performer for me today. I don't have too many shares. I have about 150. I made a little bit over $1,300 on the day, a little bit over $454 on the open. So again, still in the very early stages of what it has to show. Based off previous patterns, it's been very bullish. It doesn't mean that it has to continue that way. It just means that it's done that before. So again, confirmation is key, and I plan to only add more to my position size if and only if it begins to indicate signs of an uptrend. Lululemon is one that actually got rejected today, and it's been making lower highs and lower lows. With that being said, as of right now, I still have 160 shares. I lost $1,000 today. I'm down about 731 on the open, so it's not a perfect trade, but as of right now, based off of recent trading prices, it's a little bit more on the oversold side, but it still has so much to prove. The next one is going to be UNH, a little bit more on the oversold side based off of previous highs, and from where we're at as of right now, it offers a little bit over 8% potential based off of those 180-day highs. USB, so this is US Bank Corp, 180-day highs at almost $51. Right now, it's trading at around $45 a share. It just broke above the EMA line for the first time since it broke below the EMA line, and it's now beginning to indicate signs of an uptrend. So from where we're at as of right now to previous highs, about 12% potential. Verizon has been one that I've been personally paying attention to. Today, it had a decent day. It's testing the resistance level at the EMA line. It's previously gotten rejected. So again, confirmation is so important when trading these overall reversals. So make sure you set those alerts and only add to your position size when it makes sense to you and when you feel that direction is in your favor. So let's go ahead and follow up with WFC. So WFC had a really strong performance today. It's up 3% on the day, and based off of 180-day highs from where we're at as of right now at $35.10, it looks like we still have about 10% to cover. The last one is United States Steel Corp. This is one that has been previously bullish. It just recently made 180-day highs, but it's been on consistent downtrend ever since reporting earnings. This is again something that is very oversold, but also has been selling off for about a year. So again, you want to make sure that you set your future self up for success and not just buy the dip blindly, but make sure that there's some form of indication of an uptrend before you decide to enter a position that has been making lower lows and lower highs for the past couple of weeks. I'm talking about it because it's oversold, so decent deal, and it also was previously bullish, and it was consistently bullish for the past 180 days, which meets my criteria. So this one offers nearly a 50% ROI, but again, it still has so much to prove. And the last little thing that I want to share with you is the more patient you are in something selling off, right? If you're so certain that it's going to recover, the more patient you are, the better deal you can get, right? Because the more it sells off, better price you can get. So it's not always about buying the dip right now, but making sure that you enter when that overall direction is in your favor, because like we all know, it's not easy to make money in the stock market, but it's much easier when that overall direction is in your favor. So I really do appreciate you guys' time. I hope you liked the little update that I had for you when it comes down to AMC and GME, and also a couple decent deals when it comes down to stocks that reported earnings that recently sold off, but previously were bullish on the 180-day chart. Don't forget to stay connected. We do run our free Facebook group. It's the first link down below, and you can join over 303,000 members within the first link in the description. Don't forget to subscribe to the YouTube channel because I upload new videos every single day. Until then, we'll see you tomorrow for our live trading session, and if you want to tune on in, click the second link down below. Like always, let's make sure that we end the year on a green note. Take it easy, team.